purpose of today's call is to give you an insight into a possible vehicle for investment as a British expat in France. Now, for those of you who don't know myself, my name is Remy Hart, as you probably see here. I'm one of the senior wealth managers for Holborn Assets. I'm a fully qualified financial advisor and personally specialize in two main jurisdictions. I'm currently sitting in our Spanish office. I'm in the boardroom at the moment. So if you hear any outer sounds, bear with me. I'll try and go on mute maybe when Edny's speaking. But I predominantly focus on clients, expatriates based in France and Spain. I've got a good understanding of the tax and legal frameworks within both jurisdictions and certainly a good idea of the best and most suitable vehicles for investing as an expatriate in France or Spain. So today we're focusing on France, and a big subject for France is assurance fees. And people are always questioning how they structure their assets, especially from a UK point of view. Once you move to France, those UK ISAs, UK savings don't really hold any benefit. So what are the alternatives? And as a company, we specialize in looking at alternative tax efficient vehicles in France to re-establish your wealth in the best possible way, whether that's for tax efficient income, succession planning, or just generally safeguarding your capital. So a bit of an introduction to Holborn Assets. We're one of the largest wealth management companies globally. We operate in 150 countries worldwide. As I said, I'm based in the Spanish office and head up part of our European division. We have around 4 billion under management. Edny's, I think, going to touch on a few hundred billion, but we specialize in various different areas, from savings, investments, pensions. The list sort of goes on, but we're very happy and excited for this webinar and sort of non-formal partnership, I guess, we've had for many years with someone like Prudential, and was kindly joined by the lovely Edny from Prudential. Edny, do you want to give a quick hello and an introduction to yourself?
Yeah, thank you very much, Remy, for inviting me, and thank you very much to everybody on the call for listening to us. It's a great opportunity to talk with you about what we do and give you a bit of an insight in terms of the kind of Pru and what we do in Europe. France is one of our jurisdictions. In terms of myself, my name is Edny van den Broek. I've been with the Pru for quite a long time, about 15 odd years. Mainly, say the last 10 years with Prudential International. Very exciting part of the organization because very much the growth of our company is coming from Europe. And France is one of the territories that's really key for us at Prudential International. We don't work with every financial advisor in Europe. We've been working with Holborn for quite a long time, and with Remy before Holborn. So it's a great opportunity for us to share a bit with what we do and give you a bit of an insight in terms of how Pru manages your money.
Perfect. Well, Edny, as I said, thank you for joining today. I'll go ahead and share my screen, and guys, we'll run through a bit of a presentation. Look, Edny's the international account manager. As he said, been with the company many years. Knows more about Pru than I could ever know. But the purpose of the call is just to give a brief sort of understanding of the vehicle itself and an insight into Assurance Vie. So as a financial advisor in the expatriate market, we specialize in the ongoing servicing and advice for clients outside of the UK, whether that be structuring their assets, receiving inheritance, selling properties, what to do and how best to structure assets, as well as restructuring assets from the UK. So look, today it's purely around an alternative vehicle. As I said, we're not tied with Prudential. We're a completely independent company. We have what's called freedom of market. Again, Prudential is not tied to Holborn. We're both big organizations. We don't work in that manner. But the relationship is there. It's strong. This is a small disclaimer, Edny. I think, again, once we get to the point of preparing and sending suitability reports, all this information is detailed for client use. But I guess for compliance purposes, this has to be listed.
Yeah. Yeah,
Any comments there?
if you can move on to the next slide, that slide very much is all about that I personally can't give you any advice, and it's all about that, with investments there are certain risks attached to it, but the key point is that, and that's of our chat today, is that if there's two key takeaways that I want you to take away from this, is that you need to seek really good financial advice. That's number one. And number two is you need to have a locally tax compliant product. So if you're in France, what we're going to talk about today, that's a French solution. And like I said earlier on, is we don't deal with every financial advisor in Europe, but we deal with Holborn. Go and see Remy and talk to him about your circumstances, because they're all different, and he will be able to guide you through what's the best for you. But
I think that's a key point, Edny. Sorry for jumping in, and I may do that throughout the meeting, but just from a financial advisor perspective, obviously you, as a large organization, everyone's heard of Prudential, you're the international arm of the business. You obviously, as a company, are only going to deal with licensed and regulated companies like ourselves. So, as I said, I'm a fully qualified financial advisor. We have a license and regulation to give advice throughout Europe. To be honest, in every jurisdiction, we have 18 international offices. But as we talked about, this is purely focusing on British expats in France, and a really good, safe and secure vehicle to hold your assets. Obviously, Prudential deal with expats in Spain, Malta, Gibraltar, Cyprus, and as Eddie mentioned, I've been using Prudential for many years, and certainly will continue to do so. Main reasons for a safe and secure way to hold your assets in a tax efficient manner. But the big reputation of Prudential, the safety, security, again, we'll probably touch on quite intrinsically throughout the call today.
Yeah, absolutely right. And actually, one other thing to bring to this is that you want to do business with a company, whether it's financial advice or like us, a provider that is going to be in the market, in 10, 20, 15 years time and beyond. And since I started with Prudential International, a lot of the companies that, so let's say our competition, have either disappeared or changed or are no longer servicing their clients. And that's not what we're about. We're about looking after clients for the long term. And I'm going to talk to you about that in a second. But like I said about tax compliance, it's very, very key. Today, we're going to look a bit in terms of our heritage, where does Pru come from? And we're going to stand still and look at the Treasury and Investment Office, because it's a really unique way of managing clients' money that we have at the Pru. And then lastly, we're going to have a look at the unique Prufund, the smooth investment journey. So that's kind of really our agenda for today. If you
Eddie, I'm just going to jump in again.
Yep.
For people joined in today, we have a live question and answers. I think you find it top hand of your screen. So any questions throughout the presentation, feel free to ask there. Myself and Edny will do our best to cover off these at the end of the session today.
Absolutely. So if we're looking at Pru, you may recognize these adverts, and the man in the Pru, very familiar face. And whilst the concept itself doesn't apply to the UK anymore, it very much applies in other countries around the world. Vietnam, for example, in Asia, it's widely used, but also countries like Poland, where we use a similar kind of process. But anyway, that's kind of where the Pru came from. And we're here in the business, like I mentioned, for the long term. We've been in business since 1848, and we look after clients' money for the long term. And with that comes a particular strategy to be able to do that. And you need to be cautious with managing money, particularly if it's not your own money. Therefore, I want to give you a bit of an insight in terms of how we do that. But anyway, today I'm your man at the Pru. And like I said, what Remy already said is if there's any questions, put them in the chat and then we'll deal with them. If we can't do them today, we'll come back to you on an individual basis. But if you could move on to the next slide, please, Remy. It's worthwhile to start with talking about our financial strength as a company and to highlight M&G and the Pru relationship. Because in 2018, our company kind of demerged, the Prudential company demerged, and we decided for the Prudential brand to only operate in Asia. It has a number of products that we service the Asian markets with, which are fundamentally different from what we do in Europe and the UK. Therefore, we want to have a clean distinction between the various companies. And the Prudential brand now only operates in Asia. What we operate in the UK and Europe is under the Pru brand. So Pru, that's the term that people use for Prudential anyway. And what we've done is we've used our existing heritage of the way we manage money, the funds, etc., and wrap that into the Pru brand, which is part of the M&G group. And for those who know M&G is a fund manager, and the Pru is a life company. And if you put the two together, you get a really strong opportunity to manage money for clients. And we've been doing that for 177 years. So huge amount of experience. And as you can see on the slide there, we look after a huge amount of capital for clients. About 153 billion of that sits in our multi-asset fund range. And the Prufund range of funds is part of that. It forms about half of that, which we're going to look at today. And that's the kind of the product that we distribute around Europe. When we look at insurance-based companies, it's important to look at Solvency II, i.e. financial strength. And Solvency II is a framework, a European framework of companies who require an amount of capital to have on their books if the worst was to happen to that particular company. And I'm pleased to say that Prudential International and the M&G Group, we have a huge amount of capital beyond the requirement. So 150% for Prudential International and 210% for M&G as a group. So it's a really strong position to be in, and not every company has that financial strength. Now, I mentioned earlier that we manage our funds and our clients' money in quite a unique way. We do that through the Treasury and Investment Office. And today I'm going to give you a bit of an insight in terms of what they do. It's a really exciting part of I think of my job. When I'm in the London office, then I sit with the Treasury and Investment Office, and I hear their conversations. I see what they do. It's fascinating. But anyway, coming back to the financial strength, you may have heard of Standard & Poor's. We enjoy one of their very highest ratings, and AKG is also a rating agency where we enjoy the highest rating as well. And then lastly, we're Dublin-based. That's where our company runs from. I might be physically based south of London, but I work for the Dublin company, the Dublin organization, and with that comes the fact that there's no restrictions in relation to Brexit. So we operate in Europe, and we look after the European market. If you could go to the next slide, please. So before I'm going to give you a bit of an insight in terms of how we manage money, it's important to cover the Assurance Vie part of this. And this is one of the main objectives of this webinar, is looking at, what is Assurance Vie? I'm going to give you only the kind of the headlines, because I appreciate that most of your circumstances are individual. The French system is fantastically complicated. But what I want to do is just to touch on the headlines to give you a bit of an insight of how our proposition fits in there. So first of all, our Assurance Vie solution benefits from the fact that it kind of is an offshore bond and it grows virtually kind of tax-free. There's a small amount of dividend tax that needs to be paid, through Dublin. But if you compare our version of Prufund with, say, the UK version of Prufund, there's a difference there, because you benefit from that gross roll-up, as we call it. So that's an important part to start off with. The other part is, a lot of clients always ask us, can I take money out if I need to? Yes, you can. There's a 5% penalty-free regular withdrawal facility on the bond that we provide. It's fully
during the first 5 years, Edny, correct? From year six onwards.
That's it. Any time there's a 5% penalty-free regular withdrawal facility at any time you take it out. If it's the first 5 years or beyond, that always applies. There's a slight difference if it's a partial withdrawal, but we can cover that another time.
Individually, yeah.
But anyway, so there's access to your capital by means of a regular withdrawal. It's fully Assurance Vie compliant in France, and there are statistics out there that in France that there are about 60 million Assurance Vie products that the clients have taken out, and it just shows that it's a popular solution in the same way that that an ISA is popular in the UK, because it's really tax efficient and it just makes sense to have an Assurance Vie whilst you're in France.
I'm going to jump in again, Edny. Apologies. That's a very important point, because we have to look at this as two parts, right? First of all, the structure. As a British expat in France, the structure is an Assurance Vie. It's an international prudence bond, correct? The reason we use Prudential is to have access to the range of Profunds, which Edny is going to touch on, but the benefits of an Assurance Vie are listed here, and again, are subjective to individual requirements, right? What's the purpose of setting up an investment? Is it modest capital growth? Is it tax efficient income? Is it passing on monies? Again, that's the purpose of having a one-on-one conversation with myself to ensure it fits in with your needs and objectives. And carry on, Edny. Apologies for jumping in.
No, it's good. I like it when it's interactive like that. It's good. Another benefit is of our solution in France is that you have options to take a policy out in sterling or in euros or in US dollars. So there's a currency element there, which if you look at the local Assurance Vie solutions in France, they will always be euro denominated. So it's just one of the other kind of advantages of taking the Prudential solution that's available in France. The key part really about tax efficiency is the fact that you only pay tax in France on the gain element of your withdrawal. And I've mentioned earlier on ISAs, and I quite often get clients asking us about, okay, well, can I keep my ISA? Yes, you can. But if you take money out of your ISA and year for year in France, then you pay tax on the full amount you're taking out of that ISA. Whilst if you have a tax compliant product in France, like the Assurance Vie that we provide, you only pay tax on the gain element of that. And that could be a huge difference in terms of tax, and a huge saving that you potentially can make. But again, speak to Remy about your personal tax situation.
I think that's important, Edny. As far as some people question what that benefit is, and without going into too much detail, you base it on investing £100,000. Again, very important point with the sterling. Currency market is volatile as it's ever been. Without getting involved in currency conversions, you can just establish these in sterling, can be paid in euros. The currency flexibility is great, but from a tax perspective, from drawing an income, the gain portion, for an example, investing £100,000. After year one, the policy grows by 5%. Let's say we take the 5%, for example's sake, you're only taxed on the gain element. So you're taxed on £5,000 of your withdrawal. So let's say in France, a flat fee, for example, 30%, your taxable rate, it would be 30% of the 5,000, which is taxable. So again, we can run through simulations individually, but the tax is minimal and extremely negligible, especially in the first few years.
in the few, yeah, correct, the first few years, and it's to do with how that is calculated. But again, we've got a kind of a sales aid for that, a tax guide that can give you the example. But continue on to from that gain and the tax efficiency onto how can you use the international prudence bond. You can use it for long-term planning, where you can, for instance, take out a policy, have your children as life assureds, and they could then take over the policy, later on after say the client passes away. Another kind of good option is that you can nominate beneficiaries, and that's quite a unique thing in France and in Spain for that matter, where we have a similar type of product where you can nominate a beneficiary that on your death, that person will get either all or part of your policy without the need to go for probate. And we all know that probate can take a very long time and is a very complicated matter. This takes the hassle out of that and makes it a whole lot easier. And lastly, it's a very tax efficient way also because you can pass on money in a very tax efficient way. There's a kind of an exemption of 152,500 euros in terms of tax, on leaving your money to beneficiaries. So it's a very important part. If you could go on to the next one, please, Remy.
Let me just touch on that briefly. Again, sorry for jumping in, Edny. From a financial planning aspect, there's no better way to structure your assets for an Assurance Vie for succession benefits in France. Example, married couple in France established an Assurance Vie prior to the age of 70, set it up in joint names, so a joint life last death basis, meaning if one of you was to pass away, it's transferred into the sole name of the existing or last remaining spouse. When the last remaining spouse passes away, it's distributed to any number of beneficiaries. So let's say your children, for example, who all will receive an exemption of 152,500 euros, exempt from tax. So again, this sits outside of your estate. There's no long drawn out probate. It's outside of Napoleonic law, where in France you get 100,000 euros, for example, on a property sale or when that liquidizes. This sits as a standalone vehicle that can be distributed to your loved ones or beneficiaries pretty straightforwardly with those really good exemptions. Again, outside of the 152,500, it's 20% tax up to 700,000. Again, these are set up before the age of 70. If you're over 70, there's still benefits, and it's up to 30,500 for beneficiaries. But again, we can speak about that individually.
Yeah, absolutely. Very, very briefly, kind of the basics of the tax regimes. Like I said at the very start, France is quite complicated in relation to tax. There's 4 marital regimes, for example. That makes life a whole lot more complicated. But to make it easy, I'm just focusing on kind of the new tax regime since 2017, where most of the audience will probably fall into the prélèvement forfaitaire unique. That is, let's call it income tax. And that's one part of it. And the other part is your social charges, which is 17.2%. And the benefit is very much about starting the Assurance Vie clock ticking as early as you can to get to the 8-year stage as quickly as you can, because then the tax rate drops significantly, and there's a big difference there in terms of the tax that you would have to pay. There's allowances. Again, speak to Remy about your circumstances, but just to give you a flavor, it's 4,600 euros per person, or 9,200 per couple. So that's there. That is in a very, very high level overview of the kind of the Assurance Vie and the taxation part of it. Anything to add, Remy?
Yeah, that allowance bit is very obviously beneficial. Having an Assurance Vie for 8 years, if it's a married couple or a joint policy, for example, that 9,200 euros from the policy completely exempt from tax is great. But you're right in saying so. Get the ball ticking, get the ball rolling, and that clock ticking on 8 years.
Yeah. Quite right, or get the egg rolling in this case.
There you go.
As we're recording this so closely after Easter, I thought that little slide of your eggs in one basket is quite a good one, because that's what we want to avoid. We want to avoid the all your eggs in one basket, and you want to invest your money in a multi-asset solution, and that's what I kind of wanted to touch on with you today. If you go on to the next one, please, Remy. And yes, this slide is probably one of my favorite slides in general of what we do, because it captured really nicely on one page the very complicated and unique way of managing money. Whilst Prufund on the outside looks really straightforward and is designed to be straightforward, what happens underneath, or underneath, under the bonnet, so to speak, is really, really complicated. And I mentioned before that when I go to the office in London, I sit with the guys that do this stuff, and I find it fascinating. To give you an idea, we've got hundreds of people working in the research field. So these are the guys who will look at, okay, what is a good investment that we can go into, whether it's an equity or a bond. Just to remind you, an equity is where you buy a share of a company. And that the value of that equity is based on what the company expects to earn in the future. And a bond is or a fixed interest asset, sometimes called, is where you make a loan to a company or to a government, and that's basically where you give them the money and you get that money back after a certain time, plus you get your let's call it the interest or coupon. And we've got hundreds of people that do that research, and they search, okay, what are the best possible assets? Once we found what is the best possible asset for the long term, we then put it into a model that looks at, okay, what happens to those assets if we expose it to a number of factors or trends in the market. And a really good example is what's happening in America. And last year, as a business, we felt that the election was going to pan out in the way it's panned out, and we knew that the present leader in America has been talking about tariffs for the last 40 odd years. That was going to happen, and tariffs have an inflationary impact on trade and on everything. And if you know that inflation is going to come back, and if you know that interest rates are going to be an issue, then you need to have assets that can deal with that. And that's what we do at that stage, what this scenario modeling. Then after that, we look at, we've decided roughly what kind of assets we want. We then look at, so within those assets, which do we take that have the least possible risk and deliver the highest possible return? And once we decided that, we then put it into what we call the strategic asset allocation. That's your SAA there on your right hand side. And I would like to kind of explore that in a bit more detail. So if you can go on to the next slide, please, Remy. This is
an overview of the Prufund themselves, right? We're talking about the range of Prufund, which currently holds around 150 billion pounds. Just to simplify it, perhaps for a client perspective, obviously there's, like you said, loads that goes underneath the bonnet as far as the market research and the analysis and the portfolio construction. But the reason we use Prudential is to access this range of funds.
Yeah.
So great to have an understanding of it. Yeah.
Yeah, exactly. So Prufund works with strategic asset allocation, and that basically what I just did, that process before this, that's how this comes about. And yeah, that forms part of that multi-asset fund that I mentioned earlier on in terms of numbers. But just to explain this slide, is on your right hand side is the investment association mixed sector. Let's call it an index, and what that is that what the industry believes is a mixed portfolio, so to speak, where you have between 20 and 60% in equities. So that's our benchmark, so to speak. On the right-hand side, the red color is equities, the blue side is fixed income. Remember, the equities are your share of your company, the fixed income is your loans you make to companies and to government. The green bit is real assets. And real assets are things like property, for example. Now, that's all very well, but that model is very much outdated. The one on the right-hand side, because in the olden days, when I say that, it's let's say about 20 years ago, if equities were going up, fixed income would go down. And that's called negative correlation. Now, negative correlation doesn't exist anymore in the way it used to do. And it's very much about, sometimes when equities go down, fixed income goes down as well. And that's very important to be aware of, because that creates a particular volatility and it creates a vulnerability at the same time. Now, what we do with Prufund, so on your left-hand side, the pie chart on your left-hand side, you can already see it's a whole lot more diversified. And the darker the color is, the more specialized the investment is. And you can see on your left-hand side, UK equities are kind of very light pink. Everybody understands UK equities, but less so that applies to, for instance, India. India and China require a fundamentally different strategy and fundamentally different approach in how we go about equities, but it also applies to other type of assets, of course. So the immediate conclusions we can draw is that we've got a whole lot less equities and we've got a whole lot less fixed income, but we've got a whole lot more real assets. And in a real asset space, this is where we are a differentiator, because things like property, for example, behave fundamentally differently in times of economic pressure. For instance, with interest rates rising, for example, or inflation, property delivers a stabilizing or dampening effect because it's a long-term asset rather than it being very, very short-term. And as you can see, we've got a whole lot of, real assets. We're also very big on infrastructure, for example, that sits in the alternative investment space. And infrastructure is, for instance, water pipelines or wind farms or even fiber optic networks in Germany, for example, where we own a number of companies that do that. So it's a whole different way of managing money. And what makes us unique is that as a company, we can do that. We can tie up our money for the long term. Not every fund or fund manager can buy a property in London for £1 billion and have that sitting next to equities in their portfolio. So it's to do with the investment mandate, and we can do that. And not everybody is in that same position. And if you move on to the next slide, please, Remy. That's kind of the slides I showed you is basically the diversification of our Prufund range of funds. And this slide it's perhaps difficult to read from a distance because the print is so fine. But on your left hand side it's 2002, and on your right hand side is 2023, and the colors are representing basically the asset classes I just talked about, where red is equities, blue is fixed income, green is real assets, and you've got alternatives in there as well, and a whole lot different types of assets. And why do I want to show you this slide is that if we go back to 2002, I don't know if you remember what happened, but there was a dot-com bubble that happened at that time. In general, the industry believed that about 12 or 13 different types of assets would be sufficient. But over time, we've evolved the asset allocation to holding approximately 34 different types of asset classes. And what that brings you as a customer at the end is it brings you more stability, because we can manage money. So if one particular asset is not doing so well, another one picks up the slack. And that's what matters. And the other side of this slide is that no asset class is always a winner. It always moves around, and that's an important one to highlight as well. Any questions on that, Remy?
It's funny. I always view Prudential as, I don't know if I should say this, quite a boring black and white type investment. But obviously, when you look underneath the bonnet, it's really quite the opposite. And going back to that I don't work for Prudential, I'm very impartial here and sit on the client side of the fence. I'm very boring myself when it comes to clients' money. We're looking to generate a modest return in a really risk adjusted way. Going back to the all your eggs in one basket, a client might say to me, well, I've got 500,000 to invest from my ISAs or from my savings, for example, or I've just sold my UK house. What should I put it all into Prudential? Now, I personally can't sit here as a qualified advisor and construct a portfolio that would have anywhere near shape or form the diversification that something like the Profunds give you access to. I think going back to a chart like that, yes, I could create something on the right compared to something on the left with 150 billion pounds into is an absolute no-brainer. But I always say it's a bit like watching paint dry. You know, the purpose of Prudential and the Profunds is to tick over, right? And then that's it. It's got an expected growth rate, which I'm sure you'll touch on. But obviously, what goes underneath it is thousands and thousands of different elements to the portfolio, which is, you know, for client security and protection, the end game.
Absolutely, absolutely, 100%. And this is actually a really good example. 40 Leadenhall in London town. This is almost next to our head office. It's a complex that we built. It's finished. It's 85% let already. It's £1 billion worth of property that we just can, provide. And we determine who goes into those properties. We determine the leases, and most of our leases are all index linked. That means that if inflation or interest rates go up, the rent will increase in a similar way. And this property has been built to the highest possible specs for what modern day working looks like. So there's gyms there, there's wellness rooms there, there's libraries, there's a whole loads of different types of facilities there for it to be a perfect working environment. It's right next to Monument Tube Station, for example. There's all the other companies in the city that one needs to be close to. So it's the place to be. But the point of this is that we can make this happen, and not every fund can actually do that out there. And we control basically who goes into it. So it's a really good example. I always very much enjoy, walking past it and seeing how successful it is. But could we go on to the next one, please, Remy? So this one, we're now moving into more the Prufund story. So before this, I've showed you a little bit about, how we manage money. And now I want to kind of focus a bit more on Prufund. Prufund is one of the solutions that sit in our multi-asset fund range. And Prufund is available in Europe in two flavors, where you've got Prufund Cautious and Prufund Growth. And Prufund Cautious, its heritage comes from the financial crisis in 2008, where there was a huge demand for funds that don't take too much risk, with a small degree of equities, and it's very popular. It's been very popular ever since. The Prufund Growth Fund is a much bigger fund because it delivers a slightly different performance. I'm going to show you the expected growth rates in a second, but it has a slightly higher exposure to equity markets, and therefore it has a slightly higher expected growth rate. But the two flavors are there. They both benefit from the unique smoothing model, which I'm going to give you a flavor of in a second. But anyway, that's
just to take a step back, and just as a sort of reminder, we have to look at this at two parts, right? The initial structure is that Assurance Vie vehicle with Prudential. So you hold the tax efficient French savings vehicle. Now, what we put into that Prudential vehicle is obviously interchangeable, but the reason for using Prudential is purely just to have access to this range of Profunds. Yes, we have the ability to add certain exposures to different areas and different funds and make changes throughout the year. But as I keep referring to, the purpose of using Pru is to safeguard money and watch that paint dry in a very boring and easy way. But we want to have access to the range of Pru funds. There is availability to switch into different areas, but the purpose of this is to look at the Pru funds in particular.
Yeah, no, absolutely. And one of the beauties of Prufund is that we can tell you in advance what you're going to be getting. And we did it by means of the expected growth rates. And these are the expected growth rates. The Prufund range of funds is available in 3 currencies, euro, sterling, and US dollar. And those versions of Prufund are all biased, or they're all kind of say more linked to their currency, not from a currency perspective, but more from the geographical position. So Prufund growth in euro would have most of its assets linked to European assets, and where Prufund growth in sterling will have the asset allocation more sitting towards UK based type of assets. Anyway, they all have individual expected growth rates. There's a difference between the cautious and the growth. The cautious has a different strategy. It's more what the word already says, cautious. Growth has the opportunity to have that bit of more exposure to the markets, and therefore your investment can grow. It can grow a bit faster. But that's the expected growth rates. We review these every quarter. The next quarter is going to be the 26th of May. And what we do, Prudential, we then inform the financial advisors if there's any change. If there's no change, we'll let them know as well. But we'll keep that going. So that's the first part of how our smoothing works. And if you could go to the next slide, please, Remy. Actually, sorry, I forgot about this. Yes, to give a bit of a flavor of, if you can go back to the building blocks. Yeah, so to give you kind of a flavor of how we come to the expected growth rate, it's very much as building blocks. And we first look at, what do you get for your cash return? What do you get for your money? We then look at, an inflation assumption, where we work out, okay, well, we think that inflation is either stable or not stable, or we work that out. And that's part of the expected growth rate decision. And then we look at government risk-free premium, and then we look at all the other bits, your property, your equities, your credit, and so on, credits, fixed income. And that will form your expected growth rates, that the ones that you've seen before this slide. So that's the first part of the Prufund smoothing story. It's what I call the forward-looking element of it, because in advance that is what you're going to be getting. And then the next part, Remy, if you go to the next one, and then you need to click through 3 or 4 times, I think, 3 times. That's it. Yeah, perfect. Actually, one more. The next part is the unit price. So whilst we have all this talent and all this resource in finding out what the best assets are and finding out what the expected growth rate is, markets, when I say markets, I'm not talking only about the equity markets. I'm also talking about, fixed income and all the other types of assets. They behave in a particular way. And sometimes markets in general do strange things, like, for instance, what happened with COVID. The bottom fell out of all the markets, and the smoothing process is designed to deal with that. So if the unsmoothed value of the assets, if that goes above the smooth price, above the threshold, so to speak, or below, then we make what we call a unit price adjustment. If it operates within that train track line of the red lines you see in front of you, then there's no change. The unit price remains the same, the expected growth rate remains the same, and everything will continue. But this is designed to deal with when markets don't behave as we expect them to behave. And that can work both up as well as down. So that's an important part, and it's a bit more complicated to explain, but I thought just touch on it at high level. It's a formulaic process, but it gives you hopefully an idea of how that works. If you could go to the next one, please.
I think you're right, and just my opinion there is I always view the Pru as a simple way to combat market volatility. It's probably wrong to say on a recorded line, but I would view it as something like the next best thing to a fixed rate, where you know your expected growth rate, you pretty much know what you're going to get. Yes, you're not shying away from market volatility, but you're there to combat it, as I said, and have that smoothing process where your stable, modest capital returns is the overall goal, whether that's cautious or growth. But
yeah, it's like I said, it comes back to what I said at the very, very beginning, is that we are very careful with what kind of assets we would invest in, and because it's not our money, it's our client's money, and we want to make sure that when a client invests with us, that they get their return back that they're expecting, and that's important. And
I guess this graph shows it perfectly.
yeah, exactly. This is a great graph to kind of to close kind of my side of this webinar, where I'm showing you here the journey, the investment journey of Prufund Growth and Prufund Cautious. So Prufund Growth is the blue line, and Prufund Cautious is the red line, and there are steps up and down, and those steps they represent a unit price adjustment. And if we go back to say July 2020, you can see there the big dip. That is the COVID time. You can see that there. But if you look at the other two, the yellow line and the gray line, the yellow line is the the IA mixed index, and the gray one is the ABI mixed index. Those are our peer groups, so to speak. They didn't do very well, and I think most importantly, if you go to the very, very right of that graph, you see that the IA and the ABI all make a dip. That is at the moment. That is at the present. But if you look at Prufund, we're still delivering the expected growth rate that we're delivering at the moment, and that's what it shows. And this is not short-term performance. This is performance. This is a 15-year track record, and that's an important thing to remember, that we do this for the long term, and we're not in the business for short-term profit. So with that, I would like to leave it, and let me know if there's any questions.
I think just from personal experience, and obviously I have clients in Prudential, cautious and growth throughout this period. Obviously, when COVID hits, markets fall by 30-40%. The Pru funds drop by 8, 11%, I think, unit price adjustment. If you fast forward 12 months, the positive unit price adjustments were all added. And as I keep going on about, the idea is to go for this straight line, right? Caution is going to be slightly under, growth slightly higher, but you want to target 5, 6, 7% a year for the rest of your life. It's a whole of life contract, a very important part as well. It's not tied in for 10 years, 20 years. It's whole of life, so it's completely open. So we'll open up to a bit of a question and answers. There's a QR code directly for my calendar. So take your phones out, take a picture. If you want to have a one-on-one consultation, absolutely no cost. Feel free to book a slot in my diary. You're going to have the next 2 months available, I think. I'm going to send a follow-up email around shortly. I'll put in Edny's contact details, but reach out to me. Let's have an individual conversation. So that just allows me to go through what we call a bit of a fact-finding process, just understand everyone's individual situation, what the objectives are, how you have your assets arranged at the moment, where you want to be in the future, what the income requirements are, what may be happening in the near future around your finances, and essentially put a financial plan together. So following that free consultation, I'll send you advice. The This will come in the form of a suitability report. We'll get a opportunity to run through that together and go through step by step the ins and outs of pretty much what we've discussed today in the form of a compliant suitability report document. And as a company, we're here to sort of establish that bond for you. I would be the appointed advisor on any bond, for example, and I provide an ongoing service. I speak to clients every 3 to 6 months, depending on how regular they want to speak or what's going on in their world. And the purpose of those calls is just to have a general update, see how the fund's performing. Generally do it in line with the Prudential quarterly updates. Edny's gone into a lot of great detail there on what's underneath the bonnet. But from my point of view, the reason for using Prudential is for simplicity from an investment point of view. Obviously, what goes on underneath is highly technical and so many different elements. But from taking a back step, looking at what the fund achieves and what we're targeting is modest capital growth in a tax efficient manner, and all the benefits from passing on monies to taking an income. So, as I said, feel free to book a slot in my diary. Happily have a conversation with anyone and everyone. I'll stop sharing the screen for now. So hopefully you've got that. As I said, I'll send over an email following this with a recording, but got quite a few questions coming in before pre-webinar, which is always nice. First one is, can you provide one tailored for the individual? And please confirm if they have the same benefit of the UK tax benefit. I think we've covered that, yes. I'll happily prepare any reports for anyone if it's right. It has to be right for the right person. We'll complete a risk questionnaire, a fact find, and ensure the vehicle is correct for someone's circumstances. Tax benefit in the UK, Edny's touched on that, very similar to a UK ISA. Tax benefits of holding an Assurance Vie in France from a tax-deferred gross roll-up, tax-efficient income, succession benefits, probably even better, other than allowing your loved ones to pay 40 to 50 to 60% inheritance tax. Bit of a no-brainer. General information in Assurance Vie, I hope we've covered off that. Terry, invest in standalone emerging market stocks in the Assurance Vie. Edny, do you want to touch on this as far as what can be done outside of the Prufund themselves?
Yeah, there's a number of funds within the range available within the Assurance Vie. Within Prufund, there's a number of emerging market assets within there as well, and that's important to mention. Like I said, we've got the resources to understand these assets. Not everybody has the capacity to actually be on the ground and talk to the various funds, how they operate in those emerging markets, but we can. And that's why there's a number of exposures within that range, the emerging markets, both in fixed income as well as in the equity space. But there are a number of other funds outside of Prufund in the Assurance Vie. But if I look at my book of business in Europe, it is almost 95 to 96% Prufund, because that's what people come to us for, because it is unique. It is, to use your analogy with paint earlier on, it does what it says on the tin. And yes, on the outside, it looks straightforward. Underneath, it's really complicated, really exciting, but we deliver that peace of mind to clients. We're in the game for long-term, consistent returns for our clients.
I think it's a really good point. As far as diversification, I go back to that all eggs in one basket. There's no way, shape, or form you can have as diversified plot as that. If it comes down to a client being higher risk and looking for higher returns, then certainly as an advisor, I would construct the portfolio, utilizing the range of proof funds, so the growth funds or the cautious funds, but then having different exposures to more equity-based funds within the proof. So we have 20 switches available free per year. From experience, I tend not to switch within Pro. We invest into the pre-cautious or the pre-growth, and we leave it. That's the purpose of Prudential.
Yeah, absolutely.
Stable, predictable returns.
Absolutely. And the thing is, with investing is, unless you can sit behind your computer every day, unless you can have access to the relevant, correct sources of information, you can manage your fund. But most people don't have that, and you want to be able to sleep at night and not have to worry about it. We've got all the expertise. We've got all the experience, and that's why we have the solution that we have, and that's why it's so successful, because we do that for both advisors as well as clients.
It certainly makes our life a bit easier, Edny. It's probably why you have 300 billion under management, right? Question from Martin regarding 25% tax-free lump sum from pension. What's the best way to move it? Again, that's probably a separate, more personable subject. If you're in the process of moving to France, get in touch. We'll have a chat to look at that. But off the top of my head, certainly take that 25% tax-free lump sum whilst a UK tax resident. Can this advice apply to US expats? No, Ed, I'm afraid not. This vehicle itself is specifically designed for British expats in France, correct, Edny?
Yeah, correct.
Okay, well, we have a US arm to the business at Holborn, so for anyone US connected from the US moving to France, certainly get in touch and we'll set you up with one of our US specialists to look at cross-border advice there. That's pretty much from the questions free. Not many coming in during the webinar, but Edny, from my point of view, really appreciate your time here and really giving us a good understanding of the Pru themselves. Again, taking people back to the two parts of it. The Assurance Vie structure is key. Having that as a British expat in France as an alternative to an ISA, for example, great way to manage and look after your money. And we've probably touched on 100 reasons why we use the Pru, but I'm certainly not tied to Pru. I'm an independent financial advisor. But if we're looking to safeguard funds, set up tax efficient income, pass on money in an easy tax efficient way, there's not many better options. But it comes down to having a conversation to understand your needs, your objectives, and I'll prepare any financial advice and send it over to you. We have another question just coming in. For the inheritance tax-free amount, is there any limit of investment in total? No. So, Edny, you've probably got certain clients with millions and millions. I have a few, but there's no limit on Prudential. You can invest 100 million if they want.
Yeah, absolutely. There's not many people that can have that in their back pocket, but no, that we take anything. The reason why we have a maximum on our literature is that to separate retail clients with non-retail clients. But if you have 100 million, do get in touch because we can find a solution for that.
Well, again, that depending on the value, it comes down to having those conversations because if there's a married couple, for example, it may be more beneficial to set up two separate Assurance Vie vehicles to really allocate those tax exemptions. If you're investing 1.2 million off the top of my head euros and you have 3 children, a married couple can set up 2 Assurance Vies, let's say 900,000, and all of the money will be passed on tax free. But that, personal situations and objectives, have a chat with me. We'll work out a simulation. We'll work out what the best structure is to establish the Assurance Vies, and we'll go from there.
Yeah.
Another question has come in: can we move the money from ISA to yours? Edny, have you had any experience of that? It generally comes from personal bank accounts, from my experience, from an ISA to a cash account into Prudential or Pru.
I would need to look into that. It's possible. I think it's possible. It's possible. It's not easy, but it's possible. And it's what I would recommend the person who asked the question to do is to get in touch with you, Remy, and then you can have a chat with them, and then come back to me, and then we can look into it more specifically. But I would say that it is possible.
I think from experience, some ISA accounts do have a cash account element to them. That can be used as the source of funds and transfer. But again, let's have a chat and look, take me up on that free consultation. My diary is open. It will automatically book you a 30-minute Zoom call. Let me bring that screen back up just for reference. So, look, oh, blimey, we're right at the start. We're probably running out of time now, but we'll leave it on the QR code.
There we go.
There you go. So, guys, take a picture of that. It will give you a direct link to my calendar. As I said, 30-minute start, you'll automatically be sent a Zoom invite. And as I said, the purpose of that call was just for me for explaining a bit about your situation. I'll ask a lot of questions, work out your objectives, how you have your assets structured. And from there, I'll formulate my advice and send that via email. We'll get the chance to run through that sort of step by step and cover any questions. As always, given the size of Holborn Assets, given the size and reputation of also of Pru, we always recommend doing your own due diligence, not only on myself as a qualified advisor on Holborn Assets and certainly at Prudential, and we're here to assist in that due diligence process. It's a very safe and secure way of generating a return and holding your money. Edny had a very good point there of sleeping easy at night. It's quite a big objective for a lot of my clients, and knowing their money's safe, secure, ticking over, and a regular income there if they need it, and ensure monies are passed on to their loved ones. Look, let's have the conversation. I feel like I now work for Prudential. It's very much not the case, just to be clear. Edny, really appreciate your time today. Any sort of closing comments?
No, I just want to thank you very much for having me on this call. Thank you very much for those who dialed into it. It's been very good to be able to talk and give a bit more of an insight in terms of what we do. And very much appreciate it, and thank you very much for inviting me.
Thank you, Edny. Appreciate your time. All the best.
Pleasure.